Okay, guys, welcome to the next lesson. And today we're going to be talking about these 5 topics. The first one is what is fundamental analysis? Fundamental analysis is trading using the bias of news. So on news, let me just pull up this website. So on news, we use different websites. I explained this in the group chat, but I have to do it again on this video. So news, you find it on, I usually use these two websites. So that's, we have fxstreet.com. So if you go on fxstreet.com, okay, like this. Sorry, my mouse pad was making noise. Okay. So if you go on fxstreet.com, just click continue, then go to economic calendar, then there's economic calendar right there. It's the same thing on myfxbook.com. You go there and click economic calendar right there. Okay, takes you to the news page. So on news, you can click here and filter the currency pairs that you want. You can put JPY, okay, just make sure you ticked AUD for Australian dollar and make sure you have ticked all the currencies that you want. Then we have impact news here. Do you want to see high impact, medium impact, low or no impact news? So you filter out and remove all these check boxes and just check this one which says high impact, as we want high impact news which move the market. Okay, so these are the events that are coming up. Today is Wednesday, and this just passed. GBP news came, euro. We have AUD, and this week we have NFP, non-farm payroll. So this is one of the biggest news that you hear traders talking about, which is here 2 days from now, non-farm payroll. So if you click on it, it will tell you a brief description of what it is. And the little hack that I told you guys is, for example, if you have this news coming up in 2 hours, you just click on it, then you read the last line. So here it says, so a high reading is traditionally seen as positive or bullish for the USD, while a low reading is seen as negative or bearish. So you just wait for the figure to come here. There's the previous, which is 179,000. Consensus is what people are agreeing as traders that is going to be at this level, which is 600,000. Then actual is the one that will actually come when the news comes in 2 hours. Okay, so if this is a high reading, it's seen as positive. So if this is a high reading, for example, here the consensus is saying it's going to be 600,000, which is less than what it was last time. So people are anticipating the dollar to be weak. But if it comes higher than the previous, it means that this news has shocked the market and probably is going to move the US dollar a lot. But we don't trade news much. We just know the effects of news on our trades, but we focus on chart patterns and what the market is telling us. Okay, so I'm done with the news websites. So we go to the next thing, which is, sorry, I was opening 2 tabs here. Where's my other tab? Okay, there you go. So fundamental analysis is about news. Then sentimental analysis is generally how the market feels about a currency pair, and whether people are hedge funds are buying or banks are selling a particular currency. So this is found through what we call a COT report, but we don't use it in our strategy, so you don't need to know it. But sentimental analysis is another type of analysis that you might know. Then we have technical analysis. Technical analysis, oh, my tongue is just slipping. technical analysis is what we have been doing in the group, and it's the use of trend lines, chart patterns, analyzing the candlesticks and all of that. Some people use indicators, things like moving averages, Bollinger Bands. That's all technical analysis. So when you're just dealing with the chart, you'll be using technical analysis. Okay, let's go to the next thing, introduction to trading view. Okay, let me open my trading view. So trading view, okay, this is trading view. All right, let me just open a blank page. How do I do it, by the way? It's supposed to be here. Okay, yeah, log chart. Let me just use my back testing chart. Okay, so trading view. Okay, something is happening on USD card. We'll see it after the lesson. Okay, so trading view, we have different tabs. Okay, we have this tab. If you click it, you can see the currency that you are on. We have, by default, you don't have these. By default, you just have this arrow. So to have those there, you just use this asterisk, this star on the side. So if you have a time frame that you like, you just mark it as a favorite. So by default, you click there, you can choose any time frame that you want. So I love to use the 15 minutes for refined entries, the 1 hour, the 4 hour, the daily, and the weekly. That's what I usually use for my analysis. So they come here. Okay, so if you click here, you're changing your chart from the candlesticks that you're seeing to a line graph. Okay, you can go to candlesticks, and you can click down here. There are different types of charts that you can see. We have the area chart, which we never use, and all of that. So we might use the line chart to determine if it's a support or a resistance and things like that. I said in the last lesson that you guys need to know how to identify the support and resistance. Let me just go through it now quickly. Go back to the candlesticks. So if you go to the daily chart, I've clicked here for daily. Okay, so let me just remove everything that is on the chart. Remove drawings. Okay, before we do that, let me show you how to change the theme of the chart so that it looks more or less like how mine looks. So I right clicked the blank area here, and you click color theme, and you go to dark. Okay, if you click on dark, then it's basically in the form of how I do it. Then you right click again and go to settings and click on appearance. Okay, it might be here, but you click appearance, then go to horizontal lines, click this one, and opacity, put it on 0. Click the vertical grid lines, opacity, put it on 0. Click OK. Then the chart is now very clean. Okay, then we have tools that we use in the analysis. So if you come to the far left here, we have the cross, we have the trend line. Okay, with the trend line, we have all these different tools. If you click on the horizontal line, if you click there, the horizontal line automatically goes there. If you click on there and click on the trend line, you can draw a trend line. Okay, that's how you use this section. So you just star here so that it appears down here. Okay, so it appears down here on this tab as a favorite. So things that you use frequently, you just want to make them stars so that you can easily access them from here. So we have this trend line, we have a horizontal ray, we have a parallel channel. Parallel channel is like this one, and draw it like this from here to here. This can be a parallel channel. Okay, the color is black. So if you double click to change the properties of the tool or of the line that you have drawn, you can then change the color here to yellow, then click OK. Then we have the channel. Okay, so that's how the channel works. And we have different things that you highlight. We have the brush. If you click on the brush, you can write anything you want on the screen. For example, you want to tell us that you're anticipating a move like this in the market, okay, like this, then a drop. That's how you use the brush. Okay, so we have a couple of tools here. You figure them out as we're going. So the tools that we usually need are the trend line. Okay, we have the trend line, we have the horizontal ray. Then we go to the next, which is the brush tool. We have the path and the rectangle. Then lastly, we have the long position and short position. Okay, so the long position and short position basically is this thing that you see on my chart most of the time. So if we say we're going long, it means we're buying. Okay, let me delete this. Look at here. There is the long position. If we say going long, we are just saying we're buying. So if you click on that and click on where you're thinking you start your buy, probably you think it will start buying here, click there. Then where you think you're going to exit the trade with profit, you move this bar here. Okay, so we might want to take our profit somewhere here. So what I used here for this line is the horizontal line here, horizontal ray. So I just clicked it. So I'm targeting profits here. So I can just say my target profit is here and my entry is here. If I want to change the entry, I'll just drag to wherever I want. And this tool is very useful because it tells you the risk reward. So this red part is the stop loss area, and this green part is the profit area until the target. So if price gets here, that's the target profit. If price gets at the bottom of the red area, it means that it has hit your stop loss. So you exit the trade in loss after it hits here, or exit the trade after it hits here in profit. So if you click on this tool, you find it says risk to reward ratio 2.97. So it means this area is 2.97 bigger than this red area. So we usually want a risk reward which is 3 here. So what can we do? We can reduce our entry so it gets to 3. As you can see now, it's 3.0. Or we can reduce our stop loss. Okay, it gets to 3. So you just gauge by yourself to see where exactly are you going to enter, where exactly are you going to exit in profit and in loss. Then you check here. If it's at least 1:2, then you can enter the trade. So at least 1:2 like this, you can enter a trade, because if you lose 1%, you can gain 2% on this trade. But ideally we want trades that are at least 3%. Okay, so that's the long position. It's the same thing with the short position. If you click the short position, you're thinking of selling here, so you put your short position there and your stop loss somewhere there. Usually it's 30 pips or 30 to 40 pips. Then the take profit will be here, so your price would have hit take profit here. Okay, so another thing that you can use this tool is checking the stop loss. So if you double click it, you have inputs here, so you can change where it says ticks. So 30 pips would be 300. So if you click OK, so that's 30 pips. So this is on daily, that's why it looks very small. If you go back to the 1 hour and drag this over, okay. If you just make this shorter. Okay. So if you double click it, you can say 300 here, that's 30 pips. Okay, so that's your 30 pips. Stop. Okay, the chart is coming up now. Okay, so if you say 30 pips, you say 300. If it's 40 pips, you say 400. Okay, if you want a stop loss that is 20 pips, you say 200. Okay, so that's how you use this tool. All right, so you don't need to calculate stop losses anymore. You just use this tool. That will be easier for you. All right, so when you're drawing trend lines, you usually draw them from peak to peak. So if you look here, we can draw a trend line like this. Click the trend line, there's a peak here, there's a peak here, so you can draw in the two. So that's how you draw your trend lines. Okay, so you can take this one, there's a low here and there's another low there, which is connecting to 1, 2, 3, 4. So that's a valid trend line. Okay, so when you draw such, you can then analyze how the market is moving by utilizing more trend lines, okay, and anticipating the moves of the market. Okay, right, so that's how you use your trend lines. I think the basics of TradingView, I've covered them. There are some tools like replay. Replay is for you to play back a chart, so you can backtest your strategy by using the play button. You can use like this. At times you don't have time to wait, so you just want to test the strategy, or you can play it so you can see how price moved in the past. So that's the playback tool. We have, when you want to send a screenshot to someone, probably you're saying this chart and you are thinking of going long here. Okay, so you just do this, then you click this camera, okay, then you click save image, okay, then you right click and say copy image, then you go where you want to share that image and right click and say paste and send. That's how you do your screenshots. All right, so I think we are done with TradingView. Then what's the next topic? Let me just check. What is buying low and selling high? Okay, so if we look at the chart like this, if you look at the chart, okay, price doesn't move in a straight line. So when you have price moving in this manner, okay, it's in a downtrend. I covered this topic in the last lesson. We have our level here, okay. So when price is moving like this, it's in a downtrend, so we are looking to sell it going down. So we are going to be using the short position. So when it comes here, if you sell it here, price doesn't move in a straight line, so it's going to pull back. So it means your stop loss will be very high, okay? Then your target profit will be somewhere there, which is a 1:1 trade. As you can see here, it says ratio 1, okay? So this is what we call selling low. You don't want to sell low, you want to sell high when the price gives you a better price, which is somewhere there. So if you check, if we move this up there, it means that our stop loss is too far, so we can move it back, which reduces your risk. But look at what it does to your reward. It increases your reward. So you just move the stop loss down, and then your target profit will be further down. You see now, instead of a 1:1 trade, it's now 1:4. So this is how you trade. You don't want to sell here. You want to sell when it goes up. So that's what we call selling high. The opposite is true for the buys. Let me do the buys. Okay, if a market is moving in an uptrend like that, okay, and you want to buy, okay, you do not buy here when it gets here. So many people see the chart moving, going up, they say we are left behind, we want to buy here, which is fear of being left out. Then your stop loss is forced to be very low, and your target is just somewhere here, which is a 1:4 trade. So when price is moving up, just wait for it to come back down, okay? When it comes back down, at least you have a better price and a better stop loss and a better reward, okay? So instead of 1:1.5, you now have 1:6.7. So you don't buy here, you wait for it to come down, then you buy it low. If you miss this entry and price goes up, you don't buy it when it is already gone, because your stop loss will be too wide, okay? You wait for it again to have a pullback, probably to test this high, and then you enter with a small stop loss, okay? So this is the math. If you lose this small and win this big, in the overall, you will be profitable. So that's what's meant by buying low and selling high. Okay, let's see the other topic. How to enter trades. Okay, so let me just open this simulator. So this is a phone simulator. When you have your phone, this is what you see. Okay, some have Android, some have iPhones, so it's just different with the phone that you're using. This is a simulator for Android. So if you look at this, you have this button. You can edit your list. You can either click and delete it or click and move it. Okay, you can click and move it or click and delete it. All right, so we can have this one. It's for adding currencies, XAU, USD. Okay, so on this one I've added almost every pair. All right, that's fine. So you have your currencies on the side. Then when you want to enter, let's say GBP USD, you look for GBP USD. We have our GBP USD right there. Okay, you click on it. Then you have the chart. Okay, so MT4, I just use it for executing my trades. I don't use it for analyzing because it's not as flexible as TradingView. Okay, then you click add here to add your position. So click there. There's market execution, buy limit, sell limits, buy stop, sell stop. So I'll explain this right after this explanation of how to trade. So you go to instant execution. You select your lot size here. Either you want to use a 0.01 or a 0.1 or whatever. So that's a 0.01. Okay, so you select either you want to sell or you want to buy. If you want to buy, you click buy. Okay, then that's a buy. I've entered a buy. So if you check here, it says buy. I've used 0.01 here, and so far I'm still in a loss. Okay, so when price moves from where I've entered here, going up, I'll make money. But if it goes down, it will continue into negative until it blows my account or it hits the stop loss. Okay, if I want to place a sell order, it's the same thing. Click on the plus sign. Then instead of buy here, you click sell. So you select the lot sizes that you want to use according to the risk management that I taught you guys. I sent the video to explain what the lot sizes are. So now I've used a 10 lot. So I'll click buy. Okay. Then it says accept order. Then yes, I've clicked buy, accept. Okay. So now it has bought. Notice that with the higher lot size that I use, it goes to a negative profit because it has paid for things like spread. Okay, so if you want to put your stop loss, you edit your order, stop loss, you modify, then select here where you want to put your stop loss. This is stop loss, so you can go down. Oh, that was it. Sorry. Our stop loss should come somewhere. Let's just say here, 37,675. Okay, so stop loss 37,675. Then our take profit, we want it somewhere here, 39,925. So we come here, say 39,925. Then we click modify. Okay, so it has modified the stop loss and the take profit. So if price comes to this yellow line, to this red line, it will take us out with a loss. If it comes to this one, it will take us out with a profit. Okay, so that's how you enter the market. All right, so that's done. Let's go to the next topic, which is limit orders and stop orders. All right, so if you are talking about a buy limit, okay, a buy limit, it means you want the price to bounce bounce and go up. Okay, so if you're anticipating the price would move down here and bounce to go up, you place what we call a buy limit. So that's a limit order. You put it there and your target profit and your stop loss. So instead of saying market execution, when you place a trade here, when you say place trade, instead of market execution, you select buy limit, sell limit, buy stop, or sell stop. Okay, so let's go back. So when you put a buy limit, when price gets here to this price, if you check on the edge here, it will tell you at this price, which is 0.95009. Okay, so you can place your buy limit there. So when price is moving from this side, coming down, you place your buy limit there. The price would, the trade will automatically trigger when it gets here and you're already in profit when it moves up. But if you put your buy limit there and price continues down, that's obvious that you lose the trade. Okay, so that's a buy limit. Then we have a sell limit, which is the same thing. Okay, price is moving like this. You anticipate that it will turn at the top here. So you put your sell limit, it goes down. Okay, so you put your sell limit right there. So when price gets there, you anticipate that it will move down. If it moves up, it will hit your stop loss, then you're out with a loss. Okay, then we have a stop order. A stop order, like a buy stop, is when price is moving like this. Okay, this is just an example. Price is moving in an uptrend. Okay, it breaks this, then it comes down. When price is here before it moves up, okay, when price is right here before it moves up, you anticipate that this is an uptrend, okay, and you want price to go up, but you are not sure if it will go down or it will go up. You just put a buy stop here. I think you've seen me using these a lot. Okay, just put a buy stop here. So you say when price gets to this level, if you check on this side, it's 95132. You say if price gets there, automatically buy for me. That's what you tell your broker through your MetaTrader platform. Okay, so when price bounces here, it can go down. So you put your buy stop here, that when price starts going up, it will automatically buy and move to your take profit. Okay, it doesn't necessarily mean that if you put a buy stop, price will go to your take profit. It might trigger you in and still go down to take you out of a loss. Okay, so that's a buy stop. Same applies with the sell stop. Price is moving in a downtrend. Okay, you're anticipating price to keep moving down. So price has gone down. Like I said, you don't sell here. You wait for it to come back for a retest of this level, or you see what it's doing, that it wants to go down. So when it gets here, okay, you put your sell stop right there. Okay, so you put your sell stop right there. Come on, you put your sell stop right there. Okay, so if price goes up, you won't be triggered, it won't be a loss. But if it comes down and triggers you in and goes up, you are in a loss. But if it triggers you in and goes down, you're in profit. So you have to have a strategy that will teach you if it is necessary to put a buy limit or a buy stop at a particular point. So that's what I wanted to explain on that topic. Let's see if we have another thing. So orders, buy stop, and limits, that was the last lesson, the last topic on this lesson. So I hope you guys grasped something, and I hope you are still pushing, keep reading, keep trying to understand. It's not easy, but once you keep practicing it, it will be easier in the long run. So I hope you guys keep pushing. So let's keep pushing.